Well, Nilesh Shah is joining us now. He's Managing Director at Kotak Mahindra Asset Management Company. Nilesh Bhai, good morning. Great to have you with us here. Appreciate your time as always here on CNBC-TV18. You know, we were just jokingly saying that it's almost a daily 0.5% kind of compounding for small caps. And it would be true because it is true. Our colleague Sudarshan has put out an article where he went back 20 years and looked at the divergence between small caps, actually mid caps and Nifty. And he found that we are kind of set to have the biggest outperformance for mid caps vis-a-vis Nifty going back 20 years. So just wanted to get your thoughts to begin with there. Go on.
So Prashant, when making money is so easy, you know there is a risk ahead. As of today, as we speak, micro cap and mini cap as a percentage of total market cap is higher than 2007-11. We all know what happened after 2007 highs. I think today there is a herd mentality. People are buying micro caps, mini caps based on momentum, not based on fundamentals. Now there is always exception to rule. So some of the micro caps, mini caps probably are reflecting their fundamental values. But when we look at them as a percentage of market cap, as a percentage of large cap valuation, as a percentage of their own historical average valuation, clearly there is a red signal. No one knows when the momentum ends, but everyone knows that if you buy without margin of safety, then you will have to hold these stocks for a long period of time to make money.
Okay, by the way, the market is picking up pace. So, you know, the index itself is up about 45 odd points. It's trying its best to break out of that range at the moment. Yeah.
No, sorry. I just want to kind of,
sure.
press on that point because those are very strong, clear kind of words coming in from, Nilesh. So basically saying that people are buying micro caps, mini caps based on momentum and as a percentage of, I mean, you could look at a variety of things as a percentage of overall market cap, as a percentage of large caps, as a percentage of their own historical valuations. I mean, you are at highs basically. So how are you kind of approaching the market? I mean, it's, to be able to sit out while everyone around you is making money, that is perhaps the most difficult thing in investing, right?
Yes,
it is the
sure.
most difficult thing, right? So is it time to do that?
No, of course it is very, very difficult, Prashant. But I have a very simple benchmark for market behavior. When I go to party and everyone shuns me as if, I don't exist, that's the bottom of the market. And when my cousins and relatives start telling me, Nilesh bhai, ye kharid lo, tomorrow that's going to go up. And when that starts happening, I know somewhere I need to be cautious. This is the time where I will prefer caution over making money. There are enough opportunities in large and mid cap. Of course, by not going into micro cap, mini caps, we may lose some performance, but that's fine. We have clientele base who will be able to appreciate that. And our focus right now is on valuation. We want to buy real businesses, whether it's bear market or bull market, but we don't want to overpay on valuation. It obviously results into underperformance in a phase like this, but we are fine with it.
Okay, well, I don't think the time has come just yet. We also go through that, right? When in phases, when there's a lot of euphoria, then you get everyone from your driver to your watchman to your staff at home asking you what stock to buy and sell. I haven't faced that just yet, so perhaps it's not a euphoric time in the market, even in the broader markets. But Nilesh, great speaking to you. Good to see you after a while. A lot of spaces have come back after a big lull, right? Whether it is capital goods, infrastructure names, real estate. I mean, I'm seeing BHEL top the charts after so many years. How are you feeling about that? Do you think this is the start of some sort of a big capex, multi-year capex cycle? And if yes, are these the spaces to look at?
Undoubtedly, there is a capex led by first central government. Now state governments have joined in the party. And private capex led by large industrial houses is on the way up. We believe as capacity utilization starts improving, and in yesterday's first quarter GDP data, we did see some amount of recovery on private capex. Hopefully, all this will result into some amount of revival in order book and some amount of growth ahead. The second biggest opportunity which is emerging is China plus one. Global supply chains are shifting their outsourcing, and many of the Indian companies, especially multinational subsidiaries, they are getting bigger share out of their parents' purchases. Combination of global market plus local market bodes well for capital goods and infrastructure companies. Probably from here till May 24, government will push on faster execution. They were already running at a good pace, but last 100 meters, they'll put extra effort, and that bodes well for the conversion of order into turnover and profitability for capital goods and engineering companies.
Hi Nilesh, good morning. Keeping my SIPs going as I always promise you. But what are you making of these PE exits? Large PE exits almost on a weekly basis, and it's being lapped up. Do you think that it's a cause to worry? Who do you think is getting a better bargain out here, or are both gaining? One has made its money, and one is playing for a longer term.
So private equity players have a fixed tenure for their fund, and they have to exit as those funds come for maturity. What will be a better day than today to exit? Now, investors who are giving exit to private equity guys, they are taking a longer term call, and they are probably picking up those stocks at valuations which they find reasonable. Do remember that not all the PEs are able to get exit. There were a couple of IPOs where they tested out the market at the valuation which they wanted. And I believe so far they have not been successful. One good discipline of this market, and where it's difficult to say it is the top of the market, is absence of a large overvalued IPO. So far, whatever IPOs have come are of reasonable quality and reasonable valuation. We haven't seen a large IPO which creates fancy euphoria at an extreme overvaluation. And hence, maybe it's too early to say it is top of the market.
Got that. Maybe, I think there was that ARM, which is the microprocessor semiconductor company, which is coming up with an IPO, some $90-100 billion. I don't know if a global IPO will do. But that's something to watch. But Nilesh, just to take you back to what you started by saying, right? I mean, absolutely take your point. Time to exercise caution rather than kind of chase momentum. I mean, don't do that. And that is absolutely sound advice. But are the fundamental underpinnings looking pretty strong? I mean, there is, so if you just step back, banking is a sector that's been sort of cleaned up. People are worrying about the next cycle, and that we don't know, but there's a big cleanup. Real estate, largely, I mean, demand is picked up, inventories getting depleted. So overall, are things looking, are the underpinnings strong? Valuation excesses can be there, but there's nothing wrong otherwise. Would you agree with that, Nilesh?
Absolutely, Prashant. This has been a fantastic convergence of growth. Our earnings growth will be superior to our peer group in emerging market. Our governance standards are far, far superior to emerging markets and comparable to developed markets. The regulatory framework, which our exchanges and SEBI kind of regulatory authorities have set up, that provides a lot of leeway to minority shareholders. And more importantly, Indian economy is transiting by a green transformation. We are the lowest per capita emitter of carbon in the world. We are on our way to meet COP26 targets, and we produce more than 20% of our energy through renewable energy. Where in the world will investor get convergence of 3G, growth, governance, and green? And to some extent, we are seeing Birbal ki kahani in our market. Our growth story was good, but others have started scoring self-goal. Russia knocked itself out of investor radar by Ukraine invasion. China is struggling with property bubble and also their crackdown on entrepreneurship, especially technology sector. South Africa, Brazil, Turkey, they all have scored different kind of self-goals. Suddenly, the universe available for emerging market investors, everyone else is scoring self-goals and India is doing well. So we look better and brighter compared to others even more. Put together these two things, fundamentals are good, others are scoring self-goals. effectively there's not many options for an emerging market investor but to invest in India. And now I think people are convincing themselves, what's the worst case about India? I won't make any return for 6 months or 12 months. So be it. I'm here for 5 years, 10 years. I will stay invested. As the boardroom started talking about foreign direct investment in India, their pension funds are following. So we are seeing a fair amount of flow coming in from a long-term conviction, especially keeping in mind that other options are becoming dull.
And that is, I guess, one more reason why one should not unnecessarily chase momentum and then get stuck in things, and then you're trying to recover money while, the rest of the market kind of moves on, right? Because that is opportunity cost.
Absolutely. Margin of safety is the principle which one should follow in this kind of market. It's better to lose some upside than to create bigger downside.
Okay, Nilesh, before we let you go, I just wanted your thoughts on some of these auto companies, right? Bajaj Auto just reported their numbers a while back. And, these companies, the traditional auto guys, have been struggling for a while now. I mean, if you look at Bajaj Auto's numbers, 15% fall in overall sales, domestic sales down 20%, exports down 6%. So there's not just competition, but now competition from a lot of new emerging electric vehicle players as well. What do you do at a time like this? Since you're looking 5-10 years down the line, do you think these are companies that will continue to underperform, perhaps struggle to stay relevant? Or would you continue to back these guys?
So, Sonia, if I give an example from our industry, in the broking company, when online broking came, traditional brokers were able to adopt to online. In fact, they led online broking. But eventually, when low cost or zero cost broking came, online broking companies were not able to match it. And today, leadership has transited from traditional broking company, mom and pop shops, brick and mortar shops, to low cost, zero cost online broking company. Today, market is fearing about the same thing on the automobile sector. Will ICE makers be able to move to hybrid stroke electric vehicle or to maybe hydrogen fuel cell if that is the future? Now, every company is making an attempt, but clearly the new age companies, the startups, they have far bigger advantage because they are starting on a clean slate. The traditional companies, they are making money on their ICE business and they have to jump to catch the electric business. In this transition, market is trying to figure out who will be the winners. Obviously, the companies which can make that transition, that will reward shareholders. Market will also increase their valuation. But we have seen that the transition is not easy. More importantly, two-wheelers per se have also been hit by uneven recovery in Indian economy. First quarter GDP numbers showed some improvement in private consumption. It is still subdued, but at least it is now turning positive into bigger territory. My feeling is that from here till election, as more money comes into the pockets of consumers through government spending, we will see demand pick up in two-wheelers. Now, this trend should have happened, but we are unfortunately seeing a deficient monsoon, which could have material impact on rural income. Now, again, we are in dilemma. Will the money in the hands of consumers ahead of election be outnumbered by deficient monsoon? So there are reasonable doubts emerging on the demand in two-wheelers in the near term and transition in the longer term from ICE to hybrid EV. These are not easy questions to answer, and which is why market is waiting and watching, and this company's valuations have been derated.
Okay, all right. We will let you go on that note. Thanks a lot for joining in. Have a great weekend and hope to speak to you at length again very soon, Nilesh. Thanks a lot for being with us. Well.